This week, we are talking livestock slaughter and cold storage. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us again this week is University of Tennessee ag economist Charley Martinez, who is sitting in for Scott Brown. Hey, Charley, how are you?
Doing good. How about yourself?
I am doing all right for this Friday. We'll dig into the details of this week's reports coming up. But first, let's recap what happened this week in the markets.
Awesome. Well, for the market highlights for this week, it's been kind of a mixed bag depending upon what supply chain you're sitting in as a producer or anybody throughout the supply chain. Live fed cattle prices were up $2 compared to a week ago. August live cattle were up $4.97 compared to a week ago, so a massive jump there compared to what we saw in the comments last week. And August feeder cattle were up $2.23 on the week. Choice box beef was $313.11 at the end of the week, which is down $4.67 compared to last week. Cash hogs were steady to slightly lower at 29 cents lower compared to a week ago. August lean hog futures were up $1.90 on the week, and the pork cutout value was up around $3 this week.
It's definitely been interesting watching what's happening in the markets, knowing that we're at kind of that maybe winding down when we think about like summer grilling season. Is that maybe what we're seeing, at least on the beef side of things, when it comes to that cutout value and that drop back that we've seen recently?
I would definitely say that's just par for the course right now. As mentioned last week, I mean, we're kind of in the throes of the dog days of summer where we don't really have a peak season for grilling or anything like that anywhere near. But we do know that as we start getting ready for the fall and into the winter, we do start seeing some pick back up in the cutout value. So right now, I think it's just standard protocol whenever we start thinking about the box beef price. I think the one thing to kind of think about moving forward is, as we're still oscillating up and down week to week throughout the dog days of summer, how high or how low can it go? What's the variation that we're going to see? Just because we're in a time frame right now that we really haven't seen in a while, basically since 2013, 2015 time frame. And so it's going to be a matter of, how high or how low, the volatility of these prices. And then as we get ready for the fall run, how does that trickle and translate from the feeder calf markets up through the fed cattle and up through the cutout values? And then on the hog side, we'll talk a little bit about the slaughter side of things in the reports later on. But if we start thinking about the hog side of things, I mean, we're slaughtering quite a bit. And so to see, volume of slaughter go up and then the prices kind of, staying steady, to me, that signals that, there's some demand out there for pork. And that's always a good thing. And that's trickling back down through the supply chain.
And we'll get into that a little bit more, too, because I have a feeling we're going to talk a little bit about bacon coming up. Charley, let's take a look at those weekly slaughter numbers. And as we look at cattle slaughter at the end of this week, where are we sitting?
Yeah, so again, it was kind of a mixed bag depending upon which segment. At the end of the week, cattle slaughter was right at 600,000 head of cattle, which was up 16,000 compared to last week, but 16,000 down compared to last year at this time. Hog slaughter was at 2.43 million head, which is up 64,000 compared to last week. So we're starting to slaughter a lot of hogs. We did this past week compared to last week. And then if we start comparing, year over year change, we're sitting at 37,500 up compared to a year ago. And if we start putting that in reference for both of these in terms of year-to-year change, cattle slaughter is down 4.5% relative to last year, while hog slaughter is up 1.1%. So we're increasing the hog slaughter. And while, I say an eye-popping number like 64,000 head increase compared to a week ago, relatively, it's still holding par with 1.1%, increase. So steady to slightly higher compared to a year ago. Whereas if you look on the beef side of things, I mean, we're starting to really see the impact of that herd liquidation that we've had the last couple of years. And we're really starting to see, larger numbers in terms of total supply or total slaughter occurring in the beef complex.
Charley, that's going to launch us really nicely into our conversation about livestock slaughter. I think it's really interesting when we start to take a look at these numbers, a 4.5% decline on cattle slaughter. But when we look at total beef production, really kind of interesting how that number is playing out.
Right. And so, I'll get into it, kind of what that means for us as we get through the rest of this report. But just looking at the July livestock slaughter report, the overall takeaway was that total meat production in the U.S. Totaled 4.2 billion pounds in June, which is down 6% from a year ago. And if we start looking at the beef side and the pork side, beef production was 2.1 billion pounds in June. So we've produced 2.1 billion pounds of beef product. And that is 9% lower than last year, relative month-to-month change, or, compared to last year at the same time. Cattle slaughter totaled 2.5 million head, which is down 12% from last year. And so while I keep saying we're down in total, number of head, one of the things that we do see, though, is the average slaughter weight actually changing compared to last year. And what the report showed us is that the average live weight was up 44 pounds from the previous year. And cattle are currently being slaughtered for that month of June at 1,382 pounds. And so, we're slaughtering fewer animals, but we've increased the weight that the animals that we are slaughtering as they go across the kill floor, they're getting bigger. And so that's kind of something we would see, naturally, is fewer head being slaughtered, but at bigger weights to try to offset some of that loss in total production that we would see. And so that's why, you see a 9% decrease in total pounds compared to a year ago. You see a 12% down in terms of total head being slaughtered, but we actually see an increase in the weights of animals being slaughtered. On pork production side, pork production totaled 2.1 billion pounds in June, which is down 4% from last year. Hog slaughtered has totaled 9.9 million head. So if you take that number and compare it, that's actually down 5% from last year. But the similar story holds true where the average live weight is up 3 pounds compared to last year at 287 pounds per animal. And so kind of the same story where, we do have fewer numbers going through, but the animals that are getting across and going onto the chains, they're at heavier weights. And so, from a pure production standpoint, that's when the main takeaway from that report kind of summarizes together. And if you take through the first half of this year, meat production has totaled 27.2 billion pounds, which is slightly down compared to last year. And if we look at the accumulation of beef and pork, beef production is down 2% from last year, and pork is actually up 1% from last year. So while I say eye-popping numbers in terms of 9 and 12% compared to last month or the previous month and a year ago in terms of total head being slaughtered, and both the pork and the beef side of things, we're slaughtering larger animals. And so at the end of the day, that's equating to total meat production being slightly down. And it just depends upon which segment of the industry you're in. If you're in the beef side, it's down. If you're on the pork, it's up in terms of total production, which creates a lot of interesting questions for both of those complexes from a retail standpoint on through what the future is going to look like for slaughter hogs and fed cattle.
Charley, my assumption with where feed prices are sitting currently, I wouldn't expect hog or weights for either to pull back, right? Like, because and especially thinking about grass availability in a lot of the country, does that play into what we're seeing in terms of weights as well?
Yeah, for sure. I think that's part of the equation, but I think also if we think about packers and they know that they're going to run an animal and they have fewer available animals to go out in the market and purchase, well, then they need to have as many pounds on that animal when they're purchasing it to come through it in order to sell on down into the retail side of things and the wholesale side. And so if we think about it from that standpoint, when these animals are walking across the kill floor, it's in their best interest to get pounds. Maybe not so much worry about quality, because there are, if you look at the choice select spread, there is somewhat of a difference there right now, but it's nowhere near what historically has been in terms of that spread. And so right now, they're more worried. The packers are more worried about getting pounds rather than quality. There's still definitely the incentives for the quality side of things, but pounds is the name of the game and quantity is the name of the game versus quality, for lack of a better term, when it comes to both segments of those industries. And so I think that's part of it. I think, if we start thinking about the future and kind of what this report is indicating to us, I would expect, maybe steady to, even higher weights of animals getting slaughtered in the next couple of reports, just because if we know we have fewer of them in the yards, or getting ready to go to the pork packing plant, we got to get more weight on them in order to offset the decrease in supply that both the feeders and the packers are seeing inside both supply chains.
Cold storage numbers also out this week, Charlie, as we take a look at total red meat supplies and freezers. Mm-hmm. What are you noticing in that information?
Yeah, so the storage report I mentioned, it was kind of, it would just let us know where we are relative to what we would expect from a seasonal standpoint. And if you look at the storage reports, I think you would look across and see that both pork and beef, both total pork and total beef are down compared to a year ago in terms of total storage, which we would naturally expect, right? Because while we are slaughtering, fewer animals at higher weights, the total beef production as in a whole is still just the total production of pork and beef is basically being funneled straight to the wholesale, to the retail side of things. And so there's not much room for, folks to put into the freezers. And so if we look at the storage report, total red meat supplies and freezers was down 2% from the previous month and down 2% from on the year, or down 2% compared to last year. Total pounds of beef in freezers was down 3% from the previous month and down slightly compared to last year. Frozen pork supplies was down 2% from the previous month and down 3% from last year. But if we take both of those proteins all together, similar to what we would expect in prices, for fed cattle and for slaughter hogs, this is kind of what we would expect seasonally. We do see a seasonal trend down as we get through the end of summer through the middle into the end of summer for storage. Used to be storage wasn't really thought about per se in terms of being a mover and a shaker in terms of prices. But as we start creeping down to levels that we haven't seen in quite some time, it's becoming something that could be something to think about in the future. But the most interesting part of the storage report that I found kind of eye-popping was stocks of bellies. Stocks of bellies were down 16% last month and down 14% to last year. Compared to last year. And so to me, I saw that and I immediately thought of, somewhere in this country, people are eating bacon. And I can only think of burgers as the avenue of choice. But that was one interesting number that kind of stuck out to me that, it was something I would not have expected in terms of a single, single product having that much of a change month to month and being so drastically different than it was a year ago. We're talking. Go ahead.
So we're talking about bacon shortages, right? Like we haven't crept into supplies being into like a short supply of bacon.
No, it's just that amount of product being moved somewhere. Someone's eating bacon somewhere.
Well, it is the breakfast of champions. Or it should.
I will hand up say that I do like bacon, but also like sausage as well. Well, I guess technically it would have to be beef sausage if I'm trying to appease both sides of the breakfast plate.
We had some beef chorizo recently, and I was like, this is all right. I'm good with this. All right. So let's talk a little bit about when we have these conversations about decreased supplies, which we have been. I also host our healthy living program on Brownfield. So we sometimes try to make that connection for consumers. Like we're hearing all of this news about short beef supplies, but we're also talking about solid retail demand, even though those prices are going up at the grocery store. What are some of the things that are allowing this consistent, strong demand for beef specifically in a grocery store when we're seeing prices maybe creep up or start to move up? Because that grocery bill conversation is one that is universal across the board.
Yeah, so that's been a common question for the last couple of months, maybe even last year or so, in terms of we keep seeing these high prices. How does that circulate at the end of the day to what consumers are having at the meat case. And I think one of the things that makes this question so interesting and in the market so fascinating to think about is if you pay attention to meat cases historically, and if you're like me, where you kind of, if you go with your spouse to the grocery store, if you're by yourself and you kind of start wandering around in the meat cases, you kind of look at prices, whether it's beef or pork or chicken, you're kind of comparing prices and comparing what they have available, what they don't have available. I think retailers and folks that are putting product out for sale, I think one of the things that they're cognitive of is that the protein source that a consumer is going for needs to be affordable as much as it can be. And so one way that can happen is that naturally, the price of beef is lower because cattle, the cattle prices have translated to lower valued feeder calves, lower valued live cattle that then go on to be lower valued wholesale or retail prices, just because we have so much of that beef or pork, for instance. But as we start having fewer and fewer supplies, that naturally induces prices to go up. Well, what retailers can do is start changing the variation of their product mix that they offer, whether it's week to week, month to month, or special to special. And so one of the things that you might see is a reduction in sales or special features at the meat case. So you might see some of that, which like if you're a member at Kroger or Costco or things like that, where you get a member discount, you still might get that discount. It might just be reduced a little bit. But the product variation, I think, is one way that, or is a tool that retailers use. So what I mean by that is, if you think back to COVID times when we had plenty of supply on the shelves, depending upon where you were as we worked our way through COVID, people had, ribeyes and New York strips and, tomahawk steaks that became pretty affordable and really good products of cuts, and even, massive thick cut pork chops. But as we've gotten to higher retail prices or higher, realm of these retail prices, the first thing that can happen is that demand switches between protein. So beef to pork or pork to chicken, or, vice versa between all three proteins. Or what retailers can do is take a cut and change the variation that is seen at the retail case. And what I mean by that is a chuck can then be cut into thin chuck steaks, or a round can have thin cut round steaks versus roast and things of that nature. Ribeyes can be then, lower graded ribeyes can be cut really thin instead of having thick cut ribeyes. And so that offers affordable proteins for consumers, while also allowing the retailer to stretch out as much as that product as they can, knowing that product is still valuable. And so it's kind of spreading that cost around in the meat case is one way folks can do it. There might also be different products that weren't normally available. So oxtail, for instance, has become pretty common things that we see now at the grocery store that's near my house. I didn't really see that, but it's within affordable price range now. And so if we start thinking about things like that, I think that's what we're starting to see is, product variation changing at the retail case in order for the product to be affordable. And then as we start thinking about the future, I think we'll start seeing more variations of those products. You might see more research and development into more ready-made products, things that will make it easy to cook and things of that nature. But for right now, at the meat shelves and demand, from a demand standpoint, we're still seeing quality products still have strong demand. We're still seeing product being moved throughout the retail chain and the retail space. I think the question of how much more can it go before we start seeing some major retraction on demand is still yet to be discovered. And that's what makes it interesting from an economist standpoint, is at what point do we start seeing that? And right now we really haven't seen it. We're not seeing that switch between proteins. We're seeing a switch within proteins. And what I mean by that is, instead of buying steaks or, having steaks every week, some folks, might have steaks at a fewer time at a lower rate, but switch from steaks to ground beef, for instance, or switch from, a rib or a loin based steak to a steak that go round, or a chuck, or some thin cut steaks. And so that's what we're, seeing a lot of at the retail side. And so that creates a really unique consumer demand question that from an economist standpoint is going to be really interesting to watch for the next not only couple of months, but the next year and a half as we sit in these high price realms.
Charley, great to see you. Thank you for joining us again this week. We appreciate it greatly. Really only one big report out next week, which I think is jobs, which kind of ties back into this retail and consumer conversation. As we continue to watch those report, how much are we watching? One, just like job growth or job creation, but also wages in terms of how that impacts consumer buying availability.
I think you hit it right there at the end. It's, as we talk about, proteins and the cost of that, it takes money to go out and buy them. So it's, what are the wages looking like, or as people have jobs from a macroeconomic standpoint? Those are key drivers of demand, right? Price is one of the key drivers of people purchasing or not purchasing. It's their willingness to pay for a product. And so that's what will start gleaming out as we start moving towards from a macroeconomic standpoint. We're headed into an election cycle. We have, expectation of lower interest rates. And so there's a lot of different things that are affecting the consumer's dollar and what they can and can't buy from a marketing standpoint.
Charley, have a great weekend.
Awesome. You too.
So our weekly livestock market update delivered your email box every Saturday morning. Go to brownfieldagnews.com. You can subscribe there. You can also submit questions and comments. And for a daily rundown of what happens in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.